Hello everyone, my name is Rainer and welcome back to this week's market analysis. So I think, you probably notice a slight difference in terms of the voice because I realized, all along I've been using the wrong USB device in recording my voice for the introduction of my video. So I kind of realized how foolish I was and, realized that I should be plugging into my USB mic instead of the one that is from my webcam. So right now I believe the voice should be better. So let me know what you think of it, alright? So this week, what I'll be looking to cover is, what I call how do you actually enter a trending markets? Because I get quite a number of comments from traders. They ask me, hey, Rainer, the market is trending, how do I get on board the trend? And, I feel that, just because there is a trend out there, it doesn't mean that you will be in the trade because you need two things, right? Number one, you need is the trend. And the second thing you need is what I call the trigger. Without the trigger, there could be a trend, but you could not be in that trade because there isn't any trigger. So I'll explain to you what the trigger is all about. And also, this is why I actually encourage traders to actually leave comments on my website, on my videos, because I get your questions and I can actually react to them, right? Because if you don't give me your questions, it's very hard for me to actually explain or to know what's on your mind or what doubts you have. So by asking me questions, it helps me make my job easier in explaining to you, the stuff that you don't understand, and to help you, understand what trading is all about and to make you a better, consistently profitable trader. So without further ado, let's go into this week's video analysis and learn more about it.
So this is the chart of crude oil, right? WTI, and this is daily chart. So let me explain to you, what I mean by having a trend and having a trigger before you can actually enter your trades. So looking at the chart of crude oil, right, it's very clear that on the daily chart, the higher time frames, price is still actually in the downtrend, right? Blue is the 50 period EMA and the red is the 20 period EMA. So you can see that price is respecting this zone here pretty beautifully, right? And for a period of time, right, it has been respecting the 20 period moving average as well. And price break above the 20 period moving average over here and consolidated between the 20 and 50 for quite a while. Then you retest the lows over here for a while once more before retracing higher towards the 50 period moving average. So no doubt the trend is actually still down, and now you have a trend. The question now is, what is the trigger for you to get on board the trend? So talking about trigger, right, I would say most trading system or all trading systems out there, right, relies on two ways in entering the markets. Number one, they're either going to trade on pullback, or number two, they're going to trade on breakout. There is no doubt about it that most trading systems either trade a pullback or a breakout. But just because there is only two variations to enter in the markets, right, it doesn't mean that these two are fixed, right? Because when you trade a pullback, there are many variations of a pullback. You can, for example, trade the pullback towards the moving average. You can trade a pullback towards a maybe previous week high or previous month highs. You could trade pullback towards previous resistance turn support. These are all possible ways to trade a pullback. And also you have a decision to make whether you want to trade when price immediately touches that level, or you want to trade it only when there's a candlestick pattern that reverses from there that confirms your bias. So you see, just because there's only two ways to trade, to enter, but there are many variations of it. So that is something that your trading plan has to tell you what to do at a particular point in time. And likewise for breakout, the first scenario I could think of is traders who trade breakout, they wait for a close above a certain level. They wait for the candles to close before they establish that the breakout is for real and they trade it. Likewise, there are traders like me whom I don't wait for a close or confirmation. I simply trade the breakout when price trades above a certain level. So these are all the little variations that you have to consider as a trader, right? No one's going to tell you what to do, but you have to decide what you will do according to your trading plan. So for example, this is a chart of the WTI, and as you know, I was shorting crude oil over the last few months in over 2014, and this was a trade that made me quite a bit. So let me share with you, how I traded this using the trend and the trigger. So for those of you who did not watch my earlier video of crude oil, I'll explain to you briefly what I did. So crude oil, I know there was a trend, and I was consistently, trading the breakout and the retracement back towards the 20 and 50 period moving average. And you can see, I would say, every time price came close to retest the 20 period moving average, for example, here, right here, here, as well as when it does a breakout down here, down here, down here, I was actually short on crude oil. So for me, those were the triggers to short, right? Those were the triggers I had. The trend was with me, and I simply took the shot according to my trading plan. And there's no right or wrong, honestly, if you ask me, because it really depends on your personality, whether you're comfortable trading breakout, whether you're comfortable trading a pullback, and there's always pros and cons to trading either of this variation, and you have to live with it, right? Nothing is perfect, nothing is 100% foolproof. It always comes with a pros and cons, and it's something that you have to accept it. If you can't accept it, then don't trade it. All right, so this is an example of a crude oil with the trend and the trigger that it took me to got into this trade. So moving on, let's look at the euro dollar chart. So euro dollar chart, again, it looks very similar to the chart of crude oil. Price is respecting the 20 and 50 period moving average, and you see price making lower lows and lower highs. We have lower lows here, sorry, lower highs, lower highs, lower highs, lower highs, and a lower high over here. And lower lows is, just lows here, 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 and lastly here. So you can tell that, the trend is obviously down. Now that you know the trend is down, the next question in your mind should be, what is my trigger to enter this trade? Do I want to trade a pullback? Do I want to trade a breakout? So these are all the questions that you yourself as a trader have to ask yourself. And just because you can tell yourself, oh, I want to trade a pullback. Yeah, I know you want to trade a pullback, but what exactly are you looking in a pullback, right? What type of pullback are you looking for? Some traders could look for previous support turn resistance. For example, maybe over here, there was this support over here, the price broke down lower, came back and retest as resistance. So some traders could get short. Let me redo this once more. So for example, let me repeat again. This could be a previous support, then price broke down lower, came back higher and retested and turned resistance. So some traders could get short down here when price retest the previous support turn resistance. Likewise, there could be traders out there who trade or got short when price retested the 20 period moving average. So can you see what I'm trying to say now? These are all pullback trades, but they're all variation of a pullback. And what type of variation you want to trade has to be decided by you, the trader. And likewise, similarly, this was a previous support down here. So price broke below the support, came back retest, previous support turned resistance over here. So some traders will also get short at that level as a pullback. So again, these are all decisions you have to make as a trader. No one's going to tell you what to do. It's all going to be based on your personality, your risk appetite, and how you actually, look and understand the markets. So let me share with you another example, the pound Aussie dollar. So this is the chart of the pound Aussie dollar, and this is still in an uptrend. All right, so perhaps traders who are looking to trade now the 20 and 50 period moving average will notice they are getting stopped out multiple times in a row. Right, they get stopped out down here, they get stopped out down here, and no doubt, it's not wrong to get long in these areas, right? Because you have a trend, you have a trigger, but it doesn't mean that just because you have a trend and a trigger, the trade has to go in your favor. No. The market doesn't work that way. The market does what it wants to do. It doesn't care where you enter or where you're going to exit, right? It will, do whatever is dictated by the mass psychology of the market. And all you can do is, just enter your trade, manage your risk, and let the market decide whether it wants to reward you or stop you out. So, there's no, hard and fast rules about it. So another trigger that I could show you, right? Personally, I do not use this trigger, but I do know that traders who does use it, and there's no right or wrong if you ask me. So this trigger is actually a trend line retest. So for example, price in the trend, and you notice, that this trend line seems to be holding up. So we have this, I'll say the third attempt price tested this trend line. It could be a possible trigger for you to get long. As a trader, you have this choice whether you want to trade this trend line or not. Then we saw price rallied higher and came back and retest this trend line once more over here. Now you have a choice again whether you want to trade this trigger. Now you have a trend and you have a trigger. So whether you want to trade it, it's up to you and your trading plan. All right. So let me emphasize once more. Right. Two things you need. Number one is the trend. When you got a trend, you need the second ingredient. It's called the trigger. And the trigger is usually either a pullback, right? PB, right? Pullback, not peanut butter, pullback. Or breakout, BO, right? Breakout. So when you have these two things, right, then you can look for a trigger to get you on board the trade. So I'm actually pretty certain that you will not trade all sorts of different different variation type of triggers in the market. If not, you'll be consistently, firing trades after trades, and basically, being more, I would say, letting your emotions rule you rather than your trading plan rule you. I would say have no more than, for starters, 1 to 2 triggers is sufficient, just to trade it in a disciplined manner, right? And once you get comfortable, once you get consistently, good at it, you can increase your trigger to maybe 3 or even 4, right? But I would say for starters, stick to 1 or maximum 2 triggers. That's all, right? Don't have anything more than that. Because if you have anything more than that, you find yourself, firing trades after trades after trades, and after that you kind of think, you get lost and confused. What am I actually doing in the markets? What am I doing? Is it even right? You get, tend to feel, very, very confused by having too many triggers. So I'll suggest stick to a few triggers. One is best, but for those traders who likes to be a little more aggressive, then two it's maximum, right? So this is the pound Aussie dollar, another trigger that I explained, right? It's basically a trend line retest, something you can consider as well. So that's basically all I have to talk about this week's topic, right? Basically the trend and the trigger. But let's share with you a trade that I'm in right now, which is actually the sugar trade. I mentioned sometime back ago, right? I think it was a few weeks back here. I said that this was a multi-year support, right? There will be traders who are going to long the support because they will think that prices of value, and they anticipate that the support will hold. So their stop loss are usually below the low of the support. And honestly, this is not, I would say, this is not wrong, right? Traders who trade support and resistance, they do well. And likewise, there are traders like me who actually go short into support, anticipating that price will break. And none of our approach is wrong, but rather, if it is only wrong if you do not have a stop loss to get you off the trade when you are wrong. Okay, so basically what I said sometime back ago was that, I anticipate that, price will break support, and my reason being was that looking at a weekly chart, I see price making lower lows and lower highs, right? So we have lower highs over here, over here, over here, over here. Then you see, I keep looking back, I noticed that, support tends to get broken. So then when price came and test this support once more, I anticipate that it will break again. I could be wrong. Honestly, I could be wrong because I'm actually wrong more than half the time. So if I know that I'm wrong, I will raise a small percentage of my capital and always have a stop loss in place to get me out of the trade when I'm wrong. So for this trade, right, I think on the forward chart was where I entered. I traded the breakout when price traded below this low. My stop loss was somewhere around here, 2 ATR. And right now, price seems to be going in my favor. So as you can see, price is respecting the 20 period moving average. So likewise, if your trigger is to short when price retests the moving average, it is a possible trigger for you and something that you can consider as well. So that's all I have for you guys this week, all right? So let's recap what I've said and mentioned this week. Two things you need before you enter a trade. Number one, you need to have a trend going for you. And when you have a trend, you need a trigger. And for trigger, there are usually two variations of it. Either you can trade, number one, a pullback, or number two, a breakout. And pullback and breakup, they have many variations of it, and it's up to you as a trader to decide what are the variations you want to trade. There's no right or wrong, but rather what suits you best. So, yep, that's all I have for you guys this week. I hope you guys enjoy this week's weekly analysis. So feel free to leave any comments or feedback on my website or on my YouTube video, all right? And please hit the subscribe button below if you do enjoyed it, so you can always keep up to date on my weekly analysis. With that, I wish you guys good luck and good trading. I'll talk to you soon.